Well, it's about 80 ounces now it takes to buy 1 ounce of gold. That's man's ratio. God's ratio, it comes out of the earth at 9.5 or 10 to 1. Which one's right? Which one's wrong? Is God's ratio wrong? No, man's ratio is wrong. At 80 to 1, silver is grossly undervalued, and it should be 15 or 20 to 1, which says that silver should outperform gold 3 or 4 to 1 from this level. Now, silver is a completely different market than gold. Gold is basically money. Silver, yes, it's money. And your next stop will probably be 60, 62 in very short order. I think over the next 6 months, I don't hardly ever go out on a limb like this, but I think $100 an ounce, I think within the next 6 months, it's an easy call.
In today's explosive precious metals discussion, analyst Bill Holter breaks down why the current gold-to-silver ratio signals one of the most extreme undervaluation setups in modern history. While the market now shows roughly 80 ounces of silver to equal 1 ounce of gold, he points out that the natural ratio, the rate at which the metals come out of the earth, is closer to 9:1 or 10:1. This gap, he argues, exposes just how distorted silver pricing has become under modern financial systems. According to the analysis, this massive divergence means silver is positioned to outperform gold by 3 to 4 times as the market corrects back toward a more natural equilibrium. Unlike gold, which behaves primarily as monetary metal, silver carries both monetary and industrial demand, giving it additional explosive potential as global supply tightens. With momentum building, he suggests the next major move is already forming. Targets in the 60-62 range appear within reach, and a dramatic spike toward $100 per ounce in the next 6 months is described as not only possible but an easy call under current conditions. This setup positions silver for one of the strongest risk-reward profiles in the commodities sector today. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
I would say start off buying silver if you got fair amount of money, add gold to it. But learning how to invest in the stock market, the bond market, the traditional markets, right now, why waste your time? Because that system is going to end. That system will stop and it will reboot. And yeah, you're going to have to learn along the way. But the reason you own gold and silver is because those are the only two monies on the planet that cannot bankrupt in a world that's bankrupting. Big buying the last, 3, 4, 5 years. And then this year, you had, when we got higher prices, you've had a lot of sellers, legacy sellers, and you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, eagles are bid over spot. But junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing, or what the wholesalers are doing, is they're taking that silver in $3, $4 under spot, and they're sending it to refiners, and they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold, and I think that's slowing down already. But what this means is going forward, there's way less junk available than there was just 6 months or a year ago because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States, including silver eagles, which right now is by far the most expensive form of silver. So what I'm telling you is if you're buying silver, buy junk. It's the best form to own, and it's the cheapest form right now to purchase. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold. Gold and silver, they are money. And this is about money. This is not about It's not about use, it's not about production, it's not about consumption. When this goes down, it is a credit event. It's the end of an empire. The United States is so indebted that they can never pay back what they owe in current dollars. And the dollar is going to crack, credit is going to crack. And when credit cracks, the real economy stops because everything runs on credit.
In this powerful breakdown of the precious metals landscape, analyst Bill Holter warns that the traditional financial system is approaching a full reset, and that investors must prepare before credit markets fracture. He argues that in a world drowning in unpayable debt, the smartest starting point for wealth protection is silver, followed by strategic additions of gold. Unlike stocks, bonds, or modern banking instruments, these metals cannot go bankrupt, making them the only true forms of money in an increasingly unstable global system. One of the clearest signals of change is happening inside the U.S. silver market. Over the past several years, heavy buying has pushed demand to new highs, but the recent rise in price triggered a wave of legacy sellers unloading old holdings, particularly junk silver, once the primary way Americans accumulated metal in the late 70s and early 80s. Dealers are now bidding junk silver below spot, melting it, and earning additional refiners' margins. This process is rapidly reducing the remaining supply. Once this temporary liquidation ends, junk silver is expected to become the most expensive and sought-after form of silver in the United States, likely surpassing even silver eagles. Holter emphasizes that gold itself doesn't go up. The dollar simply collapses against it. As the U.S. faces an inevitable credit breakdown, the real economy will seize up, exposing the fragility of debt-based money. Physical metals stand as the final defense in a system reaching its breaking point. Now let's get into the interview.
Commandeered $300+ billion of Russian US Treasury holdings. And the rest of the world looked at that and said, hey, if they can steal 300+ billion from Russia, they can stomp us out like a spider. Central banks, sovereign treasuries, they decided they don't want treasuries anymore because those can be taken away. Just like CBDC, they will be able to take that from your account. But if you have gold in hand, or if these sovereign central banks and sovereign treasuries, if they've taken capital and bought gold with it and they're storing the gold, they have the wealth. It can't be taken away from them. So plain and simple, the reason gold is where it is now is because the US dollar was weaponized, the SWIFT system was weaponized, and the US stole over $300 billion of US treasuries from Russia. Well, right now, the United States dollar, the treasury bonds, the treasuries represent, I don't know, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries. I lived in Costa Rica for 5 years, and that the Costa Rican central bank is exclusively U.S. treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? It's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country. There was always a crash, always a big panic, and then all of a sudden stocks stop dropping and they start going up like a rocket ship, but only half as fast as the currency loses value. And that's based on their local currency. I mean, you could look at, I think it was 2 years ago, the Zimbabwe stock market was the best one in the entire world in Zimbabwe currency, but not in dollars or not in gold. Gold is the measuring stick. That the dollar is going to be in its same form a decade from now, and I assume it will not. There's two ways that the dollar is measured. One way that mainstream media measures is it through the USDX index, and that's versus other foreign fiat currencies. That's meaningless. Whether the dollar is stronger or weaker versus the yen, the euro, the pound, that doesn't matter. The true valuation, as I just mentioned in the last question, the true valuation is against gold. And the dollar in the last year has lost 35-40% of its value versus the dollar in the last 12 months.
As geopolitical tensions rise and financial systems fracture, a hidden shift is unfolding beneath global markets. When the US froze and effectively seized over 300 billion in Russian treasury holdings, the world's central banks received a clear message. Sovereign reserves held in US debt are no longer safe. This single act triggered a historic pivot away from treasuries and toward physical gold, the only reserve asset that cannot be digitally confiscated or politically weaponized. Analysts warn that weaponizing the dollar and the SWIFT system has permanently damaged global trust. Many central banks, once heavily exposed to U.S. debt, have begun restructuring their balance sheets to prepare for a future where the dollar weakens dramatically. Countries holding large amounts of gold will have insulation. Those relying solely on treasuries could face balance sheet failure, currency collapse, or systemic crisis. Even stock markets offer no protection during major currency breakdowns. History shows they may rise nominally, but only because the currency beneath them is evaporating. True value must be measured against gold, not against other fiat currencies. And by that measure, the dollar has already lost a staggering share of its purchasing power in just the past year. Gold has become the global measuring stick again, and the rush into physical reserves suggests the world sees what's coming long before the public does. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.